Good morning, traders, and welcome to the Bookmap live trading webinar. This is Bruce at Bookmap, and make sure everyone can hear me here. Looks good. All right, in Discord as well as, and make sure everyone can hear me here and YouTube. Okay, good to go. All right, well, welcome to the live webinar here. We go through live analysis, forward-looking. I do this Monday, Tuesday, and Friday. It's part of the Bookmap education. You have the educational course. It is online on our YouTube channel. I can show you where that is exactly. Go to our YouTube channel here, and you scroll down. Bookmap educational course right here. Okay, watch parts 1 and parts 2 just to begin with, especially part 1. This will set the foundation. Much of the content that we refer to during this webinar is from that course. So you can see it in the live market and apply what you've learned. We have live trading by Jay Trader and a stocks trader and Scott Pulcini, a futures trader, on Wednesdays and Thursdays. So you get the whole gamut here. You've got the educational course. You've got the live analysis that applies that course in the live market, and then you have trading from two different traders. Let's go through the disclosures and we'll jump right into the market. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, good morning, everybody. Let's see here. Lee code, not enough. Oh, you're loving Bookmap. This is excellent. I'd love to hear this. Yeah, we're here for you, Lee. Right here in Discord. We have a very nice Discord channel with a lot of engagement here and a lot of support from each other, and that's the whole goal. So you YouTubers out there, if you want to join our Discord, it's very, very simple. Just go to bookmap.com. Let me show you. Okay, go to bookmap.com and then click, you can see it right here, join our Discord room. If you don't get that one, you will see it under here under the more button. And then go to chat room right here under community. Okay, Discord chat, and that'll take you there. Okay, let's move on. All right. Other comments in here. Great lessons from Scott yesterday. Absolutely. Alice, and then yeah, Rob and JC. Good morning. All right, let's get going, guys. Jump in here and check out these markets. All right, so we had our non-farm payroll this morning, and you can see the reaction market had to it. Okay, so big drop, and you know the numbers were good. All right, so this is the environment we're in, and this gives us some insight to what's going on here in these markets. Hold on a minute here. Let me get some lighting figured out a little bit, and maybe this will be helpful. Okay, hold on. Okay, so the environment we're in here, that's better. Okay, the environment we're in is it's well, good data here. Good employment data is bad for the market. Why? Interest rates. Very, very simple. The pressure is on the Fed to raise interest rates at the next FOMC. So that's it. And you can see that you know, there was initial move up due to a good number, but the market feels differently, and the move down into high liquidity in here. These kinds of events, I love the way that Bookmap visualizes this. This is what happens. This is how a big event unfolded here. A very big event. And this is behind FOMC. This is the next biggest event. That you can see them pulling liquidity before the event. Right? Look at this across the board in here. Let's just make this a little bit easier to see. Right across the board here. Okay, this is like, you know, probably I don't know, 10 seconds before or 5 seconds before the number. they're pulling their liquidity. They didn't pull here though, and they didn't pull in some of these other areas up here. They stayed in the market. This is giving us insight that these players up here believe that the market is not worth, this is a deal up here, 38.50, a little bit below. And then down here, they want to be buyers in here, right? So market traded into it. And let's see what unfolded after that. So, you know, someone knew something, right? So, or at least they put their position in there. And you can see the market kind of bouncing around since then. Okay, so now let's see what's unfolded here. Hold on a minute. Okay. I don't know why that's, there we go. Okay. All right, so that kind of kept this from really dropping significantly. You know, traders getting filled on the bid on the way down. Now, a lot of traders in here. Look at this high liquidity in here. Okay, at 3,700 the figure and the move through it. Okay, so even though there's lots of players here on the bid, you know, you can see that the market traded through it. All right, so where's the next area of high liquidity? It's down here at 36.50. All right, so let's see. Ahmed, now I see Bruce is holding the icebergs by his own hands. Yeah, the a lot of iceberg order activity as well. You can see around this event. Okay, so this is the big event, and it set the tone already. You can see for the day. Now, you know, we got to be kind of careful with it and see what traders feel over time here, because how many times have we seen this? Large liquidity getting filled on the way down here, and they stay in the order book, they're getting filled, and then at a certain point look for a shift in the order flow. Okay, on a higher time frame for the day, and we'll see if we get buyers that come in and where they might lift it. And the easy areas to point to would be up here at 36.95 and also here at 3,700. All right, so anyway, that's just some concepts in here and some ideas of what we might be looking for. Oh, okay. So yeah, I understand. Ahmed, there was some yeah, icebergs in the background or something. Okay, so yeah, I understand. That's kind of funny. So if I reach back like that, you can kind of see me grabbing like the chart there. Yeah, we can just see buyers starting to come in at the moment here. And starting to trade up into and make an equal high here. So now this is what we talk about in terms of structure. The structure is still intact here to the downside. Okay, it's just kind of testing these areas in here right now. So let's put some more kind of technical analysis on the structure and start to understand a bit what this looks like here if we get some sort of shift. Okay, see how it's breaking these trend lines. Okay, so all of them have been broken, right? There is a horizontal line that it's testing here. Okay, so it's still negative here. I mean, there's still more sellers than there are buyers in the overall. Okay, and this is where we start to put the pieces together. Okay, just because you know, the market has come back up and tested these areas here, it may break out. It may and likely just come back down and retest these areas one more time here. It takes a little while to kind of turn this around, and sometimes it doesn't. Sometimes it does. We will watch it. We will read it. We'll look at the pressures in here. Okay, we can see the buyers came in down here. Right, so that's where this whole move kind of shifted. Right, so let's just mark that up, and let's keep an eye out about these buyers and look at these buyers in here. Here we go, buyers at the top edge again. All right, so now if we get enough buyers in here, I would be looking for a retest back up to here, 36.90. Okay, so and that would be a nice little measured move there. And you can see liquidity starting to come in there at 36.90 right now. Okay, that's where the drop occurred from. Now, some pretty nice buying in here too by the aggressors, right? So anyway, we're not looking, we're waiting and watching to see if we do get buyers above these areas here. Right now, we're not. Okay, so we're still in a downtrend. Okay, we're just seeing that it is starting to. We see a lot of traders on the bid getting filled, and we're starting to note these areas in here. Okay, so if we do get our buyers in here, okay, then we'd be looking for this move up to 82.5, the breakout, and then on up. Okay, so let's see if we can get a bit more buying in here. Okay, here we go, looking for the test up into 82. Let's see it if these buyers can do that. And if we do, I think we got a likelihood for a breakout here. First area would probably be 84. Next area, and I'm just looking at liquidity levels in here. Okay, and we can also back up and take a look at some structural areas. Yeah, 84, 85 up in here. And then 87, this is kind of where it dropped from up here. But the liquidity is up here at 90. All right, here we go. Here's our breakout. Okay, so looking for the move on up to about just 84 right now. Just 84. Okay, I'm very, very leery on this one here. Here, the reason being is that we just haven't, we've seen, yes, it's true, we've seen the liquidity getting filled on the way down. We see some buyers starting to come in these areas here, but we really haven't had another retest back down. And is this enough of the buying here? Okay, when we talk about distribution and accumulation of areas, you got to have some back and forth in there. That's what it takes, and then we look for someone to really move the market at a certain point. Okay, so what has happened so far is someone's really moved the market to the downside. We have not seen really truly the back and forth quite yet. All right, so we're just looking at these structures in here and starting to put these pieces together. Right, so this is a bigger structure in here for the day that we're looking at. POC shifted, okay, to 78. All right, so it's above POC. That's a good sign. So yeah, you can see what happened here. We were looking to see if we can get up and just into like 84, 85 here. Nothing happening. It was starting to look like it was mounting here, and just traded up into this liquidity, and it's sold back off here. Now we're starting to get some of the back and forth in here, I think. Okay, and that's what we're looking for the accumulation and distribution in here. You've been looking at observing interactive brokers and absorption on the green bubbles. Okay, is that what you mean, interactive brokers with IB? Just and you're talking about futures, right? Okay, here we go again, another retest back up here by these buyers. Okay, so we'd had our pullback. We have buyers coming back in. Now we're going to get some insight here. Oh, initial balance. Okay. Yeah, okay. Yeah, looking good now for the breakout to continue here. I like it. We've got enough buying pressure in here. So up here, we were looking for it too. We had to pull back, and now we're getting our move here. Looking for our 84 or 85 here, and then some. Okay, so strong buying, looking for the move to continue here. There's 85, still looking for, let's see if we can get up to 87 here, and then potentially 90 as well. Now let's go over a few different strategies in here, and things to consider. All right, so hold on just a minute. All right. Yeah, let's see it. Buyers continuation 87, and then maybe 90 here. We're about halfway there, so it's gone about halfway of our kind of our move here that we're looking for. So because it's gone halfway, you might want to consider taking a little bit of profit there at the halfway point. You can always get back in. Okay. Now a few different considerations for trade management in here, like how to handle this order flow event. And guys, you know, they're all order flow events. It's all order flow. The whole thing is about order flow, that's what makes up the market. It is the transaction and the relationship of orders in the auction process. That's what matters. This is an order flow event up here, right? It's a news event, and we can read what happened, what traders thought about it via the activity of their orders. Okay, so now this is a pullback here, right? This is why you can consider taking some off halfway up of that move. Okay, and then look to get back in on the pullback here, and look to trade it up to here again to 86. Okay, now if you did that, you can take off another half, right? And you can hold, put your stop at break even, or maybe a little bit below here, and then hold the other half for 90. The initial entry on this, okay, now this is kind of a weird, it's a weird pattern in here. It's by the strong buying in here that we recognize with these rectangles in here, and we were looking for the breakout here and here, no, especially here. That's where we were looking for it, right? And it had to pull back again. This is where now it's a little more dicey here, but you're looking for the order flow event down here now. Okay, and what you're looking for is this, and the little back and forth in here. You can look for the buying back up above again. So anywhere in here basically would be consideration for an entry. Okay, and then looking to take some off up here at your 85, 86, as we'd mentioned, and you can get back in on another pullback here. Okay, what we're looking for right now is the continuation move. Okay, so now if you took another position here, here's another potential profit. Okay, again, now what we're talking about here, this, look, you'll need to kind of put together what you feel is your risk tolerances on some of these things and how you want to manage it. Okay, if you're on a higher time frame, maybe you want to let this run. Okay, but if you're trading lower time frame and you're looking for these smaller moves to work out, then maybe you'd be kind of getting in and out of the position along the way. Okay, and your stop would be break even, or maybe a little minus break even. This way you give it a little bit of breathing room, right? Okay, so just trying to be realistic with this, trying to be real with this. Like where would we have gotten in here? Well, this the whole oval here is consideration in here, and there's different ways to look at it. All right, and again, not trade recommendations, but different ways to look at it. A lot of times, if you want it, it's more risky, but you're looking for a pullback into this little area here, right, where you can see the little back and forth in here. That's exactly where it came. Okay, it could have come back down to here as well. Maybe you'd be setting your order down here. Okay, so here's our move, guys. Still looking for a continuation up into 90. All right. Okay, nothing else to do, just looking for the continuation to 90 here. Okay, the position was open in here, or the adding to that position was open in here. All right, some was taken off and you got your runner. Okay, you can even move your stop up if you want. Okay, now the likelihood of it getting stopped out is higher, but you'll make some money on it. Okay, so and you're still looking for this move to 90. At 90, we don't know. We're just looking for 90. Okay, that's the plan. Simple and blunt. All right, based on what? Based on the move down with high liquidity getting filled down here, and based on the strength of the buyers we saw in here. Okay, high liquidity filled. Well, here, not much in here. Here, certainly, here, and in here. And we noted along the way, looking at the balance of, and not that we're not talking, there's our target, guys, 90. Okay, so that's it for me. All right, I'd be out looking for the next order flow event. All right, maybe that's not wise. Maybe you know, this is a big move for the, you know, the rest of the session, and I'll be kicking myself. But that's what I was looking for playing out, and I'll look for another entry or another trade order flow event at this time. All right, so anyway, and then how do we kind of recognize this opportunity? Okay, all of the filling on the bid on the way down, and then the strength of the buyers. Now the strength of the buyers is actually, and this is important, you'll note it here and here. Okay, we want to see that, and then okay, they got slammed, and then you see it again though here and here. See how we're starting to see a shift, and we're you know, if you kind of have a scale here, basically it's like you know, here you're seeing sellers on this side, lots of sellers up here. Okay, but sellers on this side, sellers in this area, sellers in this area. Starting to see buyers come in, as well as these sellers are trading into high liquidity. Okay, this is how we're starting to judge the turn of events, the potential turn of events. Okay, and then we saw the strength of the buying coming in here and here. Okay, by the size of the green dots, and you can look at the volume bars as well, and then we're looking and targeting some of these swings up here. Okay, to transact, and then we had one more move back down. Then we got our breakout. We covered the breakout in here, a consideration for an entry point when you start to see that buying strength come in again, and anywhere in here, right? And then looking for the continuation, taking some off, pull back, adding maybe. Okay, this is more complex you know, type of trading, which you know can be challenging, because you know, this played out nicely, but you know, this can be challenging. Like, are you so sure that this is going to work? Well, this is what you got to put together, you know, how and you have to look at and study this kind of stuff and understand that we've got a lot of traders on the bid getting filled, heavy selling right into it, and then we see the buyers starting to come in on the other side. All right, and starting to test some of the structure here. We drew up our trend lines. We saw the break of the structure. Okay, and then we started to look for potential entry in some of these areas here. All right, so we're looking for the breakout here. Didn't get it, and we need that back and forth in here a bit more. You know, it could have come back down to here, 75. Could have done a retest back down, even broke the low slightly, but there's still a lot of buying in here. We would look for the buyers to support it. Okay, and if we do get that, now we have a scenario to go through. Okay, and we're looking for the continuation. Okay, once it gets through this little area in here, it's a lot easier, right? It's kind of like when is this going to finally be ready, right? And then this is the scary moment here, but this is where you're looking to take some off. Okay, and then once you get this move here, it's usually if you're looking for that continuation move after something like this, this is where it's going to take place. Okay, it's easier after that. It's the back and forth part that is hard. Once we get the move here, and this is again, this goes right back to Wyckoff and talking about areas of distribution and accumulation, and then the markup period. This is the markup period. Oh, thanks, Ahmad. Yeah. Let's see, Simon, you want to take a look at the NQ? Sure. Okay, yeah, sound. Ben, people are saying sound is good. All right, well, anyway, there's one event right there, and we wrapped a trade example around it. Actually, a few different trade examples around it. Okay, so I hope you guys found that helpful. Let me know if you have any questions on that. Okay, so it is a lower time frame example, but we can zoom out and we can look at higher time frame examples in here. Higher time frame example is basically the structure is still in play, the downside structure. In fact, let's edit some lines in here. Boy, I don't know really where to go from here. It should be up here, but don't really like that one. Yeah, you can see right here, right? So we're, you know, you could be looking for some sellers to come in now. You can look for maybe a continuation to the downside in here. Okay, well, let's go over it. Okay, because the bigger picture structure is still negative here. Still bearish. All right, so sellers coming in. Here's the move right here. Okay, we see our that nice buying, then the back and forth in here, and look at the sellers take it here. All right, so yeah, we've broken the trend line. We've got the sellers in here. We've gotten a pullback already. So let's see if we can get a little more selling in here, break the bottom edge, and come right back down to our breakout area here around 81 or 82. There they are, and then maybe 80 as well. That's where the liquidity is down here. Okay. Okay, there's another potential trade opportunity in here. Okay, after we see this kind of structural shift in here that we just talked about. Does that make sense to you guys? I mean, I want to make sure that it's not like we're flip-flopping around, that we see the buying pressure come in, we see the back and forth, we see the selling pressure come in. We're looking to test back down into some of these areas. This is where you can put your structure into play. Okay, we're looking at the order flow within the structure in these trade examples. All right, so we're looking at selling pressure to move it away from some of these areas here. Okay, after some back and forth in here. Okay, here's another pullback, looking again for selling to continue here. We're back down to our 82 level here. Let's see if we can, or 82, 83 level basically, and looking for the push lower, okay, into 80. Well, let's see, like, yeah, not much further below here, but then I want to see them push through it into 81 and 80 down here. Okay, so again, there's your trade opportunity, and you know, here's your pullback. Again, same concept, same ideas that we just went through. Okay, you could put your stop at break even already. Okay, if you got back, if you're looking for some of these pullbacks due to the selling in here, this is the key, guys. Look for these areas in here. I think this will be helpful for you. Look for these sellers in here. We've been doing going over this same material for quite a while about who's in control in certain areas. Okay, and it was these sellers that moved it away from up here. Okay, this is your pullback. Okay, so it depends on what you're comfortable with here. Maybe you're looking for the break in here, like I am a lot of times, and I'm looking for it to sweep the book lower immediately. Okay, it didn't do that. It kind of did, and then it pulled back, and then it kind of did it again, and then it pulled back pretty big here. But if you're a pullback trader, this is your entry in here. This is your entry in here, right? Okay, this level here, it even made a lower high slightly right in here. Okay, take some off down here. Let the rest run. Stop to break even. Okay. You get stopped out, there it is. You got stopped out, all right, at break even. You took some off down here. Look for the next one, right? Now, if you're trading a little bit higher time frame, maybe this doesn't shake you out. You know, you're in up here, or yeah, let's just say you're in up here, okay, and you want to place your stop way up here. Okay, you're looking at like a very bearish, bigger picture. Okay, your stop is way up there. Let's just go over different ways to consider trade management in here. Okay, so there's your move, and I'm just going to block these out for you guys, so we can just take a look at it. Right, so here's 1-to-1. Right, it would be the bottom of the range. I'm sorry, I didn't do that right. Let's try that again. Okay, let's try that again. So you're in here. Your 1-to-1 is down here. Okay, well, let's do 2-to-1. So, and this would be your, again, your bigger picture if you're, you know, if you're still bearish and you're looking for, you know, setting out wider stops, looking for a bigger move. So you'd be looking for maybe something like this. Here's your 2-to-1. Okay, or maybe you'd even be looking for more. You'd be looking for 3-to-1. Risk reward ratio here. So maybe you'd be looking for 36.50, right? And that would be like more like 4-to-1 or something. Anyway, you guys get the picture. Yeah, and you know, you'd be just sitting back and letting it run. Oh boy, yeah. So we're just going over a trade example here. And again, guys, it's not a trade recommendation, but just, you know, reading the order flow and then putting a trade example together, and then different ways to manage it is what we're covering. Does that make sense? Oh boy, on the way up we did see a nice move, and we would have well, I would have exited it out at this 90 level here. Okay, and I was just looking for only that 90 level, and we went through another trade example. Okay, on the way up. Okay, we saw the buying pressure come in, we saw the structure starting to break, and then looking for the move up here. And then here we noted the sellers coming in, the structure breaking on the bullish structure starting to break. And then these little ovals in here were ways to get back in. Maybe you got stopped out on this one if you're, you took some profit and then you got stopped out in this one. This one actually, even on a lower time frame, if you got in here, you'd still be in it, even with stop at break even. Okay, or we're just going through the scenario, maybe you're holding it for a bigger picture, which is what you're outlining right now. Okay, and if that's the case, then yeah, you'd just be holding it basically. Okay, you'd be looking for this move. Let's just add these in here. Okay. No, something like that. Okay, so yeah, basically a little bit 4-to-1 ratio. You'd be looking for maybe somewhere below the 3650 area. Simon, NQ, yeah, we'll take a look. Anyway, I just want to go through these trade examples, and now what we're doing is looking for order flow events, marking up our structure, and then looking for order flow to support these ideas in here. That's it. Okay, it is akin to looking at your volume profile, looking for your low volume nodes, high volume nodes, whatever. Okay, but it is the orders here that are making this up. That's why you get your developing point of control, etc. Did that even change here? Let's take a quick look. Okay, it shifted. It shifted a few times in here, from back and forth between these two areas in here, right? But it's because of the orders, of course, and then a big drop up here, down to here. Okay, so I just need to reiterate the issue here on point of control and this line in here, and traders put so much, a lot of traders put so much emphasis on this. Well, it's the point of control, but do you know what it means? Do you know the significance of it? Yeah, we can know the definition, but it's developing in lower and lower areas in here. Okay, well, what does that mean? Well, we could have a trending day. We're actually getting a little blip up here, and that's a first, right? Since the non-farm. We haven't seen that yet, so now it's going back and forth in here. So maybe this develops into a bigger range. We see buyers already starting to come in. Okay, so there you go. I mean, maybe took some off here at 80 in this high liquidity, and now you're going to get stopped out of break even. Okay, if it comes up to 87 here, which looks like it will. Yeah, we'll look at the NQ. I want to make sure that, guys, just bear with me for just a minute here. I just want to make sure I cover this for you. I think these are some pretty good examples to go through and consider, right? So there would be your stop out at break even. Okay, but you took some off down here either at 82, or maybe you're looking for that higher liquidity at 80, right? Bigger picture, you were looking for, a bigger move to unfold here. Well, look what happened. Buyers came roaring back in. Okay, so in fact, all they're doing, and even in the bigger picture here, the structure is still it's just testing this trend line here. Just keep this in perspective is what I'm trying to get at here, and your different trading styles. Okay, what time frame are you trading? How does your trade management relate to that time frame? Okay, and then you got to adhere to it, because we had a nice discussion with JTrader on Wednesday. Let me show you where that was. and on our YouTube channel. Okay, if you want to go back and you want to look at that, it was here. Let's see, right here. Okay, minimizing the risk and maximizing the return with JTrader. Okay, and this discussion of trade management. Something he said in there, he's like, you know, he educates many traders, and he said they can understand all these concepts of order flow. They can understand entries and exits. They just have a hard time though with trade management. It's the #1 thing. You know, someone that was trading extremely well, 90% of his trades were working out, but he was still unprofitable. Okay, so something's going afoul with his trade management. All right, so very important. And we went through an example here earlier at 90. I'm out. I'm looking for the next event. We found it minutes later. Took some off, trying to hold for a runner, got stopped out at break even. All right, let's jump over to that NASDAQ, take a look. Okay, and I only have cumulative volume delta here. So let's put stops and icebergs on. It's there. Okay. Let me take this off. Okay. There we go. Wow. Nice. I love seeing this relationship in here. Look at all these icebergs in here. That's quite a bit for NASDAQ. You know, it's up to about 1,000 or so. From way down here. Well, 886 basically, 900 basically. Pretty good. And then people getting stopped out on the way down. Beautiful dynamic to see and understand here. NASDAQ is definitely more is weaker. There's no question there. It's come back down and retested these lows here. All right. Now, do you think we're going to see? I didn't check it. I don't recall. I just had CVD on. But do you think we're going to get some divergence in here in cumulative volume delta? I'll bet we see some divergence at this point. Okay. I don't know if there's a lot of people that trade cumulative volume delta as an indicator, looking for some sort of confluence in there. Let's turn it on. Let's take a look. Beautiful divergence in there. Okay. So now, did you need the indicator to tell you that? Not really at all. This is where, like, you know, we're reading the order flow to understand. Like, remember we were talking about with the S&P. Okay, and on the S&P, we were saying like, yeah, lots of sellers into high liquidity, more selling pressure, a little bit of buying starting to come in here. Okay, more selling pressure, buyers coming in, buyers coming in, buyers coming in. And then, you know, some sellers taking it right back down to the low here. Okay, so now let's look at the relationship though between the buyers and sellers. Okay, so a lot more buying here than there is selling on this leg here. That's why we get the divergence. Okay, very simple. So now, does that mean that we're, oh, well, let's trade the divergence and let's see it come back up here and then up to 350? You know, if that's your trading plan and it works, then more power to you. And maybe it does. Maybe it does work for you, and you continue to take it again and again, and you like it. You're comfortable with it. the way that I've traded cumulative volume delta over the years was that yeah, I would look for it too, but I would get smashed down here, and we're still in a downtrend, and you know, it's up to you, like what to look for. And how to trade it. Maybe if you are, you know, looking for that divergence, maybe you're just looking for the move back up to here, right? A simple move just back up to this 250 area here, all right? Or maybe a bit higher, maybe somewhere in the volume profile. You can take a look here, maybe somewhere back up into like 62 or even 75. But what we're looking at is buying pressure within the ranges here, and that's why we have the divergence. That's why we have a higher high or a higher low here compared to over here, okay? And a higher high here as well, is because of all of this buying in here. Okay, so we got more buyers coming right back in, right? So yeah, so we're coming back up already to these areas, and we might get a reversal from it. Okay, is the buying strong enough? Okay, traded into and through this area, still on buying pressure. Okay, so looking for it to continue. Just back on up to here, the swing. Okay, maybe you can make it to 300 here and explore that area. Anyway, guys, I'm just trying to show you different methods in here. I know a lot of people look at cumulative volume delta. Okay, but is the conditions of the order book and the transactions here. Okay, NASDAQ is a little bit trades a little bit differently, as you guys can see, but high liquidity in here getting filled just like the S&P, and in here too. Some front running in here. The high liquidity was down at 200, the figure, but they're starting to see how these traders are. And this is what gives us insight, right? We know they're getting filled on the bid, and then we know here we see the liquidity up in front of the 200. Some of it fills, a lot of it got pulled here, but they're adding certainly more at 200. You can see it right in here, that bulge in the orange color there. Let's go to the current market. All right. So anyway, there's your cumulative volume delta. Yeah, I would have loved to have taken some off here at 260, to be honest. I like the swing, and maybe it can still kind of come up to the swing up here though at 75. But it's the majority of the volume is what I'm looking at, and we know, you know, you can just look at it. You can look at the profile here, but you don't need to. You can just look at it here, and you can see that this is a small little area compared to all of this volume in here. Therefore, it is more likely to trade up to here, and then maybe see a pullback. All right, so anyway, yeah, that's my reasoning, or you know, your consideration for taking some off up here. Does that make sense, Levi? So you're looking for a breakout on it? Yep. Yeah, I'm just, as you guys know, like I'm not the biggest fan on this. Like yeah, I mean, it's doing it. We're looking at the buying in here, but now we're getting more insight here. Look at the selling. Look at the selling. So all of this buying is meaningless if we get sellers down below these areas here. Okay. Now it's still divergent too. Right, there's still more buyers, more buying pressure in here. This is the way, I mean, I like to use it, and look at it. you know, it's up to you guys, or obviously the individual traders, but you know, look at the buying pressure in here, compare it to this selling in here. Okay, so a retest back down in here is not a bad thought. Okay, and then now let's take a look here. Okay, that's pretty hard, you know, pretty big selling in there. Okay, well, let's take a look. We can draw up our trend line. It's still in a downtrend. It has to break that. So we're looking for a break of this and then a move on up to this. Okay, and you could still be bearish here on this move here. Okay, just let's see if we can get the break and the move up to here, 240. So it's a 10-point NASDAQ move. Okay, so almost there, a little bit more. Nice buying there. Okay, so it's starting to work. There we go. Did it again. All right, so I would have taken some off there. Again, not a trade recommendation. We're just looking for some of these concepts and ideas to consider trading. It's a very small move, Levi, very small move, but you know, the concept is here in front of us. That's why we're looking at these smaller time frames in the webinars for the most part. Not just because like Bookmap is really good at visualizing all of this, but we're just looking for this small move here and then holding, right? You know, partial profit here. Maybe we do see the bigger move that you're looking for, right? In your cumulative volume delta, starting to pan out. Okay, again, though, it's not cumulative volume delta that's giving the signal. This is such a blunt indicator. It really is. Buy minus sell plotted over time. But look at this in here and put this context together. It's going to add so much more insight to it. Okay, and then maybe another consideration would be taking some off up here, 260. Okay, stop at break even right now. Okay, up here around 234 or so. Looking for continuation though in the pattern. That's right. We're looking for delta within the structure, the cumulative volume delta within the structure, and we do the same thing without looking at cumulative volume delta. What we're doing is looking at buyers versus sellers. All right. So heavy selling in here. They're dominating the field still. Okay. On this move here, yeah, great divergence on this double bottom here. Okay. Does that mean it's going to come way up here? I mean, we need to see if there's more buying interest. And we can prepare for the scenario just like we're going through right now. We can prepare for that scenario. And then we can turn that into a trade opportunity. Okay, based on structure and then the order flow within the structure. Gino, you got your rally cap on. Excellent. All right. Well, it's looking pretty good. That's some pretty good buying pressure there. Okay. So let's turn our stops and icebergs on and look for some stop runs above some of these areas here. I think we're going to get it, and we should get the now. You see, we're in your and I'm covering Wyckoff a lot lately, just because it's something we can kind of hang our hat on a little bit. You guys know who Wyckoff is. He's been around for, I don't know, a couple of centuries or something now. Well, over a century, and his methods are well known. You know, he was a good guy. He was trying to help people, and he was talking about, you know, distribution, accumulation, and markup and markdown. So this would be your, you know, accumulation in here. This is your accumulation here, and this is your accumulation here. And that's why we got a CVD that showed some of that, right? Accumulation of buyers, accumulation of buyers. More buyers in this little area here than there are sellers, and CVD shows it. All right, now we made an equal high up here. Okay, take some off up there. You can look for another pullback here. We're not out of the structure yet. We're still in the accumulation period, which could turn into distribution. And we get the markdown period below here, below 200. And we got to be attentive to all of this. And it's going to be being attentive to what's happening here. Okay, but we got our structure though, right? We're in a big range here. In fact, we can edit this a little bit better. And it, you know, fits pretty nicely, right? Across all of these little highs in here. No stop run yet to the upside. Okay, just testing the structure in here. No insight right now, so a lot of selling here. Okay, again, let's compare it. Let's compare it to this buying over here. Now we're looking at mostly volume in here. The order book we haven't looked at too much in this NQ, except for some of this on the way down and this liquidity down here. Okay, which is still down here. All right, and we're looking to see like what unfolds here. Okay, we noted the divergence and we traded it, like or had a trade example of it, how to scale out here, how to scale out up here, and try to hold it. You would have been stopped out at break even by now. Okay, or you would have been out, all out up here, depending on the way that you trade it. Okay, reducing risk along the way here. Oil is really moving, Floyd. Okay, let's take a look at crude. Boy, a buck and a half or so, right? But crude going to the upside here. This is your markup period here in crude. I'd look for it to continue. I don't see any reason why it wouldn't. Right, look for 92. It's trading. You got to get through this 91.5 here. A lot of liquidity here at 91.5, but this is strong buying. Okay, so let's trade a you know, go through trade examples in a markup period here. That's easy, or much easier. You know, we're looking for the continuation until we see something else. Okay, it's moving. Right, so you'd be looking for your pullbacks like in maybe area like here, or maybe an area here. Okay, so a lot of liquidity here, getting, you know, right here on the offer, and pretty aggressive. See how they're coming in here. Okay, we're still finding buyers though. Okay, looking for buyers to chew right through it and trade right above it here. So something's going on in the market. Obviously, we have geopolitical pressures in here, so this goes with the trend as well. So we'd be looking for that continuation here. All right, so there you go. There's your breakout, guys. We already just talked about just holding this. You're in their markup period here. Okay, you're already you know, pretty nicely in the green here. Okay, still looking for it to continue. There's no reason to think any differently. Okay, these are easier. Got to put the in it. Thanks, Floyd. Thanks for the insight on that. Okay. Oh boy, you want to go back to NASDAQ, or you want to look at ES? I'm just kind of curious because you're looking at your bigger picture and two bear flags. Sorensen, can I elaborate? What are you looking for? CVD divergence? Okay, that should be. I don't know if I answered your question already on that. That was a while back. Divergence is a very, very simple thing to look at. Buyers accumulating around 36.80. Okay, thanks, Moss. Okay, guys, pretty big pullback here in crude as well on low volume though. Okay, right back to where it just broke out from, 91.50. Up to you. I mean, like, look, I haven't traded crude in a while, but yeah, I mean, would you have taken partial off maybe up here around this liquidity here, try to get, look for that 92, or are you still holding it, or are you stopped out at break even? You gave this a shot to run to 92 and it didn't. Okay, it's still bullish. Okay, this is a low volume pullback here. Look for buyers. Let's see, right around here, something like this, right around in here. Okay, or exhaustion down here. Now, if we get sellers down here, the other scenario is sellers down here. This is where we would likely go, and even potentially down to 91.20. I'm not seeing anything yet. Okay, looking for buyers up here. Not seeing them. Okay, and then yeah, I'd be looking for the move up to about here or even here, just a pullback. I mean, there's a few different areas you can mark up. You can see what I'm looking at, the transactions into high liquidity and the big volume dot there, okay, as a potential pullback, and we're not getting it. All right, so anyway, like, even if you were holding this for a longer period, you didn't lose money. You reduce your risk. You were stopped out at break even. Okay, look for the next opportunity. Okay, this is just one way to look at it, but just talking about reducing risk. Sorensen, I'm sorry, I don't know if I answered your question on CVD or not. Oh boy, you were talking about the ES. Okay, we can jump over and look at the ES. All right, let's just do that. Not sure what crude is doing. Okay, so yeah, you're just looking at some of these bear flags in here. Yeah, I mean, it makes sense. I mean, the big move happened here below the figure. And this point of control and this back and forth and this point of control, it's still just there. We haven't missed anything in the ES. One thing to note in the ES though, just looking at this area in here, a lot of buying followed by a lot of buying. So I think we should be really kind of attentive here. That bear flag idea of, oh boy, is if we get enough sellers in here, look out for like a real big stop run down to the bottom here. Okay, maybe 65, but at least to the low of the day here around 72 or so, 73. Not seeing much right now. Just the only things that we noted here: high liquidity up in here, front running the figure as well. But we do see the selling starting to come in here at the bottom of the range. But there's still quite a bit of buying in here. Okay, so this is where. Okay, all right. I answered your question on CVD. Okay. Well, I mean, you'll see it all the time. I mean, like this is where, but don't be fooled by it. Is kind of what I'm getting at. Know what it's doing, and then read the order flow and the structure here, because we're going to get some divergences in here in this little area here pretty soon as well. There's different settings in the CVD as well. Let me get it here. I know we got it. I have it on session range. You can use your chart range in here and kind of zoom in and get a little more detail. Make it taller as well. Okay, expand it. No, I'm not really seeing any divergences in here yet. In these little areas in here, pretty equal, it looks like. Here's your divergence, Sorensen. Hold on. No, I'm sorry. It wasn't in the ES. It was in the NQ. Yeah. Slightly higher low here, but look at your cumulative volume delta. Much higher here compared to over here. Right? Here's your low. Here's your other low here in price. Here's your low here, and here's your much higher low here. Okay, all this means is that between this point and this point, let's mark it up, between this point and this point in here, there is just more buying than there is selling. That's all it means. And you can see it though right in here. There's more buying and then there's less selling here. Okay, it's not bad on the sell side, but it's not as much as the buying. Therefore, you're looking for more like a pullback here, and then buyers to maybe come in again and try to trade it back up into the top of the range here, which is exactly the trade example we went through. Okay, and covered that, and then how you might want to consider reducing risk along the way as well. Yeah, it's really simple stuff. But just be careful with your CVD. I mean, a lot of traders love it. I like it too. I mean, it's so visual. Just be careful with it because you can run you over so easily. You look at, oh, there's divergence, I'm going to get in long. And, all it happens is maybe you see this little barrage of buying curls around and there's just massive selling. It doesn't matter if this is divergent or not, right? It just doesn't matter. and it just goes very, very quickly. Like right in here, like here we have CVD, other different ways of reading it. Here CVD, wow, okay, that's selling. It's showing that correctly. It price moved, CVD moved, selling again. Okay, is it equal? Yeah, let's see them now move it then from here maybe down to about here. Okay, so looking for 210, maybe 200 as well. So this bigger divergence play is meaningless when we look at what's happening in the here and now here. Okay, so it has the potential to come down to here. Right, we even have a measured move in here. This is equal to that. Okay, so now what we'd look for a trade opportunity for something like that, okay, and look at the offer here coming in is a pullback to about here. Get in, looking to take it down here to this 221. Okay, bottom of the range, and it's up to you. You want to take some off or you want to hold it. Okay, and then looking for the continuation and the measured move down to 200. Okay, so that's what I'm trying to articulate with this CVD. It's not a bad example because this is a bigger picture CVD divergence, but the smaller picture here is the one that's really moving the market. Okay, and this is not, there's no divergence in here. I mean, it's just sellers coming in, moving the market. All right, and you'd be hoping and praying if you're holding on your CVD in a longer period. All right, so different ways to use it. Just want to cover the all these different considerations in here. Okay, let me go back to, I want to take a look again at your bearish picture. Oh boy. I mean, here's your, I know, I can see what you're looking at. I mean, your flag here, continuation, your flag here, and then looking for continuation. Yeah, I don't know. I mean, there's a lot of buying in here too. And I don't really care. Just get set up for the scenario, basically. If it's a flag or not, I mean, it doesn't matter. What happens in here is what we want to know. Okay, and if we're going to get that, if it's going to turn into a bear flag, we'll note it and we'll look for it, and then we'll look for the continuation. Let's jump back to that crude oil. I'm just curious what panned out here. And it's just bouncing around kind of where we left off. We marked up these areas for possible pullbacks. Okay, and it's just trading to it right now. Okay, so we were buying way up here and then reduced the risk and got stopped out at break even. As a potential scenario, maybe you took some off, maybe you didn't, but you didn't lose any money. We reduced the risk immediately. Okay, I mean, that's when you're buying at the top like that. I mean, one thing we covered, we said that the markup period is very easy, or easier, and that is true, and it's still in play. I mean, as you can see, this is more like a pullback here, and we're looking for buyers to come back in, and they are. Okay, so let's see if we get a pullback here. And see if we see anything, the order flow, to justify buying that. Yeah, not bad. Not bad. I mean, this is kind of taking a shot at it. It's not great either, but you can take a shot at it here. But boy, I'll tell you, my finger would be on the sell button right below here at 28. But you know, we have our justifications for this. Selling, buyers flipped up above here, kind of pivoted above here at 28. Pull back, strong buying here, broke the range up into here. Pull back, looking for a continuation on up. Okay, stop at break even already. I want this to work now in this scenario here, and that's it. Right, again, not a trade recommendation, but just consider it. You know what you're looking for and why, and then put a trade management around it. Okay, so you know you're looking for this to work right now. Let's see, Jay, from you have a rule: never buy the top and never sell the bottom. Always look for pullbacks. Yep, that's a good one. You know, question is, see, is this one ready to move yet? Maybe it's not. You know, we're still in this kind of range in here, right? So we're looking for it to move now, and we're taking a shot at it. It's not as high. See how this is not as high probability though? I mean, we have our justifications for it, but it's just not as high probability. And here's why. It's because we're still in the range. Okay, you know, the accumulation period in here. This accumulation looked pretty good to us. So we're looking for it to work out. Okay, so here it's at the top of the range. Okay, now that doesn't give you much, right? It was we said around 28 or so. You took, you know, I don't know, what, 12 cents or something up here, top of the range. Reduce your risk. You can consider adding to the position as well, you know, if you see something even better. Okay, just make sure your risk is in line. Okay, we're looking for it to work now. Okay, and if it doesn't, the risk has already been reduced at the top edge here. Just looking for the continuation. Makes sense? Let's jump back to that NQ. Pretty good stuff today. Oh, guys, here we go. This is what we're looking for, right? 200. Beautiful. Beautiful, beautiful, beautiful. All right, well, here you go. Here's your cumulative volume delta, your divergence, and then what matters is right here, right now, and then the continuation and the move lower. Oh boy, you must be pretty happy. This is probably dropping as well in the S&P. It is, and maybe this turns into your bigger bear flag as well. Okay. It never really got back up above here, and never came back up into here yet. So you have your reasons as well for your bear flag. Good stuff. Yeah, there's divergence is pretty simple, Sorensen. You're just looking for something, a difference between what CVD is doing compared to what price is doing. That's it. Sometimes, you know, people call it negative divergence or positive divergence. I think this is regular divergence, or positive divergence is like, here's a lower low, here's a lower or an equal low here in price, but a higher low here. Sometimes it's the opposite. Sometimes you'll see like you know, an equal high, but you'll see you know, maybe a lot more buying up here, like up a, you know, equal high here, but a ton of buying here, and it spikes. But it could indicate that there could be a lot of trap volume if it comes back down below the range. Okay, and then look for it to unwind to the downside, right? All right, guys. Well, yeah, you can, you know, some reduce some risk down here at 200 already, and you got a runner as well. All right, so let's just go through this again. Now, the bigger picture in the structure, what we're looking at in terms of structure, this is where, like, I think it'll make a lot of sense. We're looking at this, the order flow within the structure. Okay, this structure so happens to also match up with other structural ideas or trading methodologies like volume profile. Here we have double distribution. Okay, we have a structure here. We have another structure up here, and you can see it in the profile. Right? So, you know, these concepts, you know, this was what was important though. And this is where I have a hard time with volume profile. Is what we wanted to, we saw the selling pressure come in here. Okay. We're looking for it to break. We're looking for it to trade back down to the bottom of the range. This was a pullback, remember? Then we're looking for bottom of the range and then continuation down to and a measured move to 200. And it made sense. There was liquidity there at 200 as well. Okay. All right, Bert, you're looking for the 3650. Okay. Yeah, it doesn't look like it's going to be an easy move, guys. We have our European close right now. Okay, so keep that in mind. Anyway, guys, some of these moves in here, you know, we've seen some nice trade examples and ways to, you know, consider managing them and adopt something that works for you, right? Study it. I mean, any of these moves in here, you know, could have made you thousands, depending on how you managed it. And but the number one thing is first go back and make sure you have an edge. Okay, and then wrap your trade management around your edge. Let's go back to crude, our crude oil. All right, so here's what unfolded in crude. Took some off here, then the back and forth, and this would this have stopped us out? 28. We said 28. Oh boy, we've been really close. Now, I think we'd still be in it. Just right to it. It's not by accident. You know, the market comes back to retest these areas to see if there's orders here. Is there, you know, demand here? Is there supply, you know, that will dominate through these areas here? Once you've taken some off, you've reduced that though. And in fact, you know, our new if you guys have Global Plus, you get this, so you can download it now. I'll show you where it is. But you can use this new break-even point here indicator, and it's great. Like you can have it reset on your zero position, on your new position, or you can deselect this and then have it for your overall, so you can manage your risk for the entire day if you like. You can also put in commissions, etc. So, you know, if you took some off up here, let's suppose you did, and you're still, you know, you're weary of this, especially like in crude or gold or something, you get the retest back here, but you still want to be in this move for your various reasons. Well, if you took some up here at, let's just say 40, okay, make it easy here at 40, you took some off. Okay, but you got in here around 28. Okay, so that's 12 cents. Well, from 28 down to what, 16 or so, right? 12 cents. Let's see, where's 16? Down here, is that right? I mean, your stop could be down here for your overall break even. Well, a little bit above it, up here. Okay, so your stop could be down here, and you could still be in this because you already took some off. In fact, at that point, now you've got even opportunities to add to it, and now you're looking for a markup period. Now this is easier. The markup period is easier. Just let it run. Let it run to 92. We're likely to get 92 immediately here. Okay, at least it's coming right back to where we left off here before. It's already gone through the 91.50. Okay, looking for the continuation to 91.70 and then 92. All right. So just let this run here. Okay, again, not a trade recommendation. Got to say that. Okay. Okay, European close just coming up right now. How are things looking here? Okay, S&P's back up above where it just dropped from here. Probably coming back to 85 or point of control here. Just meaning this is the most traded level in here. Just because it's point of control and a line on the chart, you know, it's so seductive to have, oh, well, this is my structure, my point of control. But like, just understand what it is and understand if it's likely to trade there. And it is likely here because look at the buying pressure come in above here, but above where it broke down from. Okay, looking for buyers to just trade back up here to 80, 82, and then through on up to like 85 here. Okay, there's just more buying pressure. But let's, you know, keep an eye out here. Do we get those buyers up here? And then looking for it to break on this move. I'm looking for it to break on this move here. Okay. And it didn't. One more pullback. It didn't. All right, let's see it now. We got enough buyers here. And then looking for 85 here. Okay, understood. Okay, so in this area in here would be your entry. Maybe you're looking for just the 84 or front run it here. You know, take some off. I mean, it's pretty high liquidity at the point of control at 85, right? So, you know, that's something to pay attention to. Okay. It's bouncing around, is right back to where we got in here. Okay, I don't know about this trade idea anymore. We're back down here. Yeah, we're just looking for 85, and it came up to about 84. I'm very leery of selling coming in here and then the drop back down to 78 and 75 here. Right, this is a false breakout and then the move back down. Okay, which you can play that one as well. Teddy bear. Let's see here. Mr. Bruce, when you enable the break even okay, so on the commission, Teddy bear, yeah, for the futures, actually there's something we need to kind of work out on that. It's kind of incorrect at the moment. All right, there is a workaround on it, and I can show you what it is. Okay, so yeah, the futures commission, at least percentage of order, that works fine, but per contract here, it was computed incorrectly. Put in 0.12. I'm sorry. Let's do this. Put in input 0.125. Okay, it's not your fee. Just this will work. It should work, and then that should be your break even. Okay, here, let's demo it quickly. Okay, do I have it on? Yeah. Okay. Okay, one contract. Let's sell. Okay, so see, there's my break-even point. Okay, right. So that's why I got in right here. All right, and then here's my break-even point right here, 76. So it's just one tick below, and that is correct. Okay. So anyway, okay, I'm going to flatten that, and then let's take a look over at our crude. Did crude get up to 92? Not quite, not quite. Still looking for it. A little more convoluted here, you know, European close, and this was working out really nicely. We were looking for that move, and the continuation. I thought we'd go right up to 92. It's pulled back to where it broke out from here. We're still bullish in this structure here, but yeah, I don't know what else to say here. It's right on this trend line here. It's right at this level here, at this kind of 54-ish area. And if we get enough sellers to pound it through, then we're going to come right back down to 91.36 or a little bit below. Okay, they are buying off the trend line there, so that looks good. All right, so yeah, here's another consideration. I mean, it's like Jay from you was saying here, you know, it's a lot more risky to put, you know, to splice into the trade here. It's just easier to let it run and get stopped out at break even. But it's, you know, it's up to you. It's not my bag. I like to get kind of, you know, in earlier on the pullbacks, but unless it looks really good. And this doesn't look really good. The selling is a little too hard, too much for me. Okay, again, context, sellers versus the buyers in here. Okay, most likely the trend will continue to 92. All right, so because we got the mark, we got our pullback and our kind of period in here, and now we're looking for the extension. All right, a few more questions here. Let's see, guys. If do you find this helpful? Like today, we covered a lot on the trade management. If so, give me a thumbs up in there on the like, and also comment, please. You know, when the video is finished, your comment, and if this is more what you want to see, that would be very helpful. Okay, so yeah, likely that move to 92. It's still looking good here. We get more buyers up here looking for the press higher and the squeeze up into 92. Okay, so anyway, that's crude. Yeah, Teddy Bear, we're working on it. We'll get that fixed for you on the break-even point. It's a great indicator, though. Play around with it, guys. Just don't worry too much about the commission one at the moment. You'll I think you'll find it very, very helpful. Okay, play around with the way you want to manage the trade, manage your day, in fact, because you'll see how let's say you made 500 bucks earlier in the session, you know, you have that much you have the bank to play with, right? So maybe you're you can see your overall position, like in crude. Let's suppose like you got in, you already took that profit. Well, you'll see it on the overall by deselecting this box here. Okay, so play around with it. It's pretty cool. I really like it. Oh, good. Thanks, guys. I appreciate it. On the feedback here, yeah, let's just kind of conclude here and go over what we covered, review. So we talked about structure, okay, and we talked about starting to understand the order flow within the structure, and then how that can give us insight to a potential because it's structure. And we noted on the way down here, after the non-farm, okay, we're bearish, but then we noted on the way down, wow, okay, they're getting filled on the bid, and then we're starting to note a little bit of buying coming in some of these little pockets in here. That's helpful. That's when we can look for the potential break of the structure here, this downward structure, and in this case it was a pullback, but it's a potential for reversal as well, and we started to note that in here, okay, by the strong buying, okay, again with the volume within the structure, and we noted it here in these little rectangles here. You can go back and review the webinar, guys, and we covered it in detail in here, and then because of that, now we're starting to look for a trade opportunity to take price up into some of these areas and take some off along the way, and reduce the risk. Then up here we noted, okay, well, bigger structure is still bearish, right? And then we noted the buying here, back and forth, selling in here. All right, potential pullback on the selling here, and the move back down into some of these lower areas here. The swing, take some off, 82, and then 80, and then potentially hold it maybe for lower low here, and then you can see what happened. We get a lot of back and forth in here. Okay, we also covered the cumulative volume delta in the NASDAQ in detail. Right, so how to look at bigger picture cumulative volume delta, and then when not to look at cumulative volume delta, and look at what's happening in the here and now, and looking for the continuation. Okay, so different considerations in there, and lots of different trade management also here in the NQ. And then we also covered this move here in crude, and guys, we just traded up to 92 in crude, and that was the overall move that we were looking for. Okay, so we had a pullback in here, and then we looked to get back in here, and we weren't clear on this quite yet, but we're looking for it, and we were able to kind of manage that one as well, with different trade management considerations, and then look for the markup period and the move higher up into 92. Okay, so some good stuff in there. Hope you guys found this helpful. Have a good weekend, everybody. If you like the video, please subscribe to the channel, and give us a like and some comments in here. The feedback is really vital, because we look at it, we're going to go through and give you guys more in education on some of these things. Tom B is back. This webinar should redirect you right to Tom B's webinar, and he'll be going over the S&P in detail with a volume profile perspective. Okay, so if you guys like that, again, volume profile is a structure to look at in the marketplace. right? Just like we were covering different structures in here and order flow within those structures, right? So just keep these things in mind, and have a wonderful weekend, guys. Thanks for all the nice comments in here, guys. And we'll do it again next Monday. Okay, have a good weekend. Take care.